Hello. So I'll be talking about Biogen and jumping right into it. Looking at the company overview, Biogen is one of the biggest names in the biotech space. It develops, manufactures, and distributes biotechnology products specializing in neurological disorders. Two of its main operations are multiple sclerosis and Alzheimer's. In multiple sclerosis, it accounts for 70% of their revenues, which last year accounted for $12.3 billion. And in terms of Alzheimer's, Biogen invested heavily in research and development of Alzheimer's. Last year alone, it spent just under $2 billion on research and development. Today's current share price of Biogen is $269 per share, and its current market cap is $57 billion. Biogen operates globally and has direct sales operations in over 30 countries, as well as operations through distributing partners in 60 different countries. Biogen has a 1 billion people market who suffer from neurological disorders worldwide. Quickly glancing at corporate governance, Biogen has 12 board of directors members. Only one of them is tied to the company, and that's Mr. Vunatsos, who is the CEO and director. In terms of shareholders, the marginal investor are the institutional firms who account for 91.3% of all shares. Some of them are BlackRock, PrimeCap, and Vanguard. Biogen operates in 4 different continents, including Americas, Europe, Australia, and Japan. And its weighted country risk premium is 5.11%. Looking at the capital structure, first on the right, we can see the optimal debt to equity ratio of 60%, as opposed to the current market debt to equity ratio of 9.11%, showing that the company is heavily invested in, heavily structured, heavily financed with equity. The company decided not to finance with debt because of its risky nature, and therefore its weighted average cost of capital amounts to 11.71%, as opposed to what it can be with an optimal structure of 60% debt and a WACC of 6.26%. Looking to the left, we can see a sensitivity analysis of the WACC and the terminal free cash flow growth rate, which we'll get into later, but just for the sake of showing the implications of lower WACC, we can see that just 2% less weighted average cost of capital, and the company could be valued at much higher than what it is right now. For example, a 9% WACC and a 2% terminal growth rate can yield a $444.18 share price, as opposed to what it is now, $269. So the company could significantly increase its share price. Looking at stock performance over the past 5 years, the first part of these 5 years, Biogen significantly outperformed the S&P 500 with a strong revenue reports from driven by multiple sclerosis products. However, their patents have expired around 2015, one of their most significant products, which has led to a slowdown in their growth. Driven by entry of new competitors to their market because the patents expired, and therefore Biogen underperformed the market in the past 2.5 years or so. Biogen has never paid dividends to shareholders, and that is because it operates in a capital-intense industry and prefers to keep it access returns for research and development of different projects that it has. Mostly Alzheimer's disease projects, and Alzheimer's disease projects are known to be risky and unpredictable investment. And by issuing dividends, Biogen will force itself to maintain those dividends, and if they don't, then that will have a negative connotation to their stock price. And because of this unpredictable nature of their business, they prefer not to pay dividends. And I do not anticipate them doing so in the future. Moving on to the DCF, first of all, let's look at assumptions. The revenue growth in 2018 I anticipate to be 7%, which is just below what it was in 2016. The revenue growth of 7% in 2018, which is just below what it was in 2017. And I presume that to decrease by 1% over the next 5 years until it hits a stable growth of 3%. And that is because Biogen has recently approved a rare treatment for a rare neurological disease called SMA, and that was renounced as one of the greatest innovations in biotech history. So Biogen is expected to have strong growth. However, it will decrease in the next 5 years. Margins, I believe, will continue to float around 50%, just like they have in the past. Depreciation will grow about 0.01% points annually. Weighted average cost of capital, I believe, will stay at around 11.6%, and that's taken from Bloomberg. And I believe it will stay there just because I don't think Biogen wants to be financed by debt, given its risky nature. The effective tax rate is 25%. Looking at the DCF output, we can see that the current share price is $269.37. The intrinsic value of the stock, given the assumptions of the previous slide, is 281.81, and that means that the stock is currently selling at a discount of 4.6%. I therefore believe that the stock is undervalued due to I therefore believe that the stock is undervalued. Given today's macroeconomic conditions with a late expansion cycle and rising inflation and rising interest rates, I believe that the pharmaceutical industry is a safe place to be. And given the amounts of research and development that Biogen has invested in Alzheimer's disease, I believe that there will be a breakthrough in the next 5 years. Just given the experience that they've had over the past. So given the macroeconomic conditions, that they won't be affected by volatile markets and recessionary periods. Biogen is not a cyclical company. As I mentioned earlier, it has a 1 billion people market suffering from neurological diseases, and as a leader in this space, I believe that they will continue to perform, and therefore I recommend to buy or hold Biogen stock. Thank you.